All right, guys. Welcome. A very good afternoon, good evening to some. Welcome to today's live geometric trading market outlook. My name is Kenny Simon, Head of Research and Education at Blackwell Global. This presentation or geometric outlook is brought to you by both Blackwell Global and fxgeometry.com. Okay, so I'll read to you guys very briefly just the bold part of the disclaimer, risk disclaimer here, and it says Forex and CFDs are leveraged products and involve a high level of risk and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. That's it, guys. Okay. For the rest of it, you guys can always look at it again and pause and read the rest of it. Okay. All right, guys. So here we go. We shall proceed onto the chart. Now, we had some request on clarifying. Okay, firstly, before we go into the details of the chart and the patterns and a couple of things to discuss, we want to talk a little bit about volume, volatility, and liquidity. Okay, now, volume, basically, I mean, a lot of people are talking about volume. Now, volume, I'll just put it straightforward to you guys that volume is not as important to forex traders as volatility and liquidity. We're talking about traders per se. Now, volume actually is they are transaction, a number of orders that you make that would create the volume of transaction. Okay, it comes in lot sizes and things like that. Now, usually the term volume would be very important for brokers. Okay, now brokers in the sales side of things, internally in terms of operations, that would then measure their profitability factor using volume. So if I were to pick out from the three, or pick out what would not be as relevant to trading, that would be the volume side of it, but I'll pay a lot of attention to liquidity and volatility first. Okay, so I'll talk about liquidity. Now, liquidity matters most to forex traders. Okay, now it basically it has got to do with how much that instrument or the pair or even the market in general is flooded with money or potential money because there are interest from the investors. So in other words, how much profitable that pair has been spotted by traders or investors, so they pay a lot of attention. So hence the reason I pay a lot of attention to the top 10 movers. The top 10 movers are the ones that are moved by big hedge funds, companies, the big boys we call it, and usually they eye to the long term. So all these investors, the bigger ones that pump in most money, are usually the ones that would aim at swing trading, meaning the long-term type trading, 6 months and above, couple of years even. So they would look into a long-term, long span of that instrument, how profitable. So they would be trading that direction of that pair or that instrument, depending on how much momentum that can actually be picking up along or across a long term. Okay, so this is very important. So liquidity would be the most important thing, and you want to look into top movers, you want to look into bank reports, you want to look at the activities by banks and all that, and which are the pairs that they are paying attention to, and that usually would create the liquidity pool. So that would then create liquid very liquid currencies or instruments as opposed to illiquid ones. Okay, so this is a very important thing. And then what would then happen is when there are interests, that will then create the volatility. But volatility has got a lot to do with the risk level. Okay, the higher the level of liquidity, volatility, the higher the level of risk. Hence the reason you've got, and risk is usually it correlates or relates to risk. Okay, so hence to fear as well. It's not risk. Risk is volatility relates to risk. Risk relates to the fear, fear and confidence, but mainly fear. Fear is one of the most powerful sort of emotions out there. Okay, they'll pull out their investment, they'll come out of it, and all that if the fear level is very high. So the volatility level is if it is very high, it could also mean that the risk level is very high. So then you could use the volatility index or the VIX, VIX. If you type that onto Google, you can read a little bit about the VIX index, or the VIX, and that's actually a fear index. Okay, the higher it is, that means there's a high level of risk, high level of fear, and that means investors are selling that particular instrument that they feel fearful of. Okay, so there you go. So you got your volatility there, risk level. So we want to pay a lot of attention to liquidity. Hence the reason we want to pay a lot of attention to which pair we are picking for the day. So it's really no point of us sticking to one pair only for the entire year of trading, because we might miss out the opportunity. These are not pairs that are ridden or chosen or even cherry-picked by investors or the bigger boys. So we want to ride along the trend that has been created by investors and has been ridden by investors. So this is what we want to do. So there you go, guys. So a little bit about volume, volatility, and liquidity. I hope that makes sense. If at all you guys have got any question more on that, or any other doubts that you may have, feel free to email me at academy@blackwalltrader.com. Okay, guys? All right, there we go. Now we are on to the chart and onto our platform, the MT4 Blackwall Global Platform. I'm on here now, and I'm looking at the USD CAD. Now the USD CAD, as you can see, I'm on the USD CAD 1 hour chart. I've seen some resistance have actually happened. I have drawn out, or am showing you the formation of a Z pattern in yellow. Okay, that Z pattern there. So what I am forecasting is a potential or a probability of prices to fall from this area here. This is the C to D leg of the Z-like pattern. This Z-like pattern, I'll just draw out for you, is called a bullish type pattern if it's like that. Yeah, so I have A here, B here, C here, and D. So that's my A here. Yep, and then I've got my B right there, and I have my C and my D. Now how do I project that fall from C to D? Usually you've got the first option, which is the AB's length equals to CD. So all you need to do is double click that A to B, and then you move it all the way up here, and then you get that projection to the D area. Okay, so I'm looking at a potential fall from price now. Current price is at 1.3684. Now the problem with that, I've just rounded that to 4 decimal places. So after the decimal point, 4 places after that. So I'm looking at 680 as my psychological level, because I'm looking at price now is 1.3684. 84, the last 2 digits of the price, is really close to the 80 psychological level. What I need to know is whether or not you have got more buyers or more sellers. Now usually if it's under, prices are under the 80s, then you've got more sellers pulling down the price. If you've got the price moving up and up and up, and is going above the 80, then you're looking at more push of the price by buyers. So you need to look at the dominance. Are they actually by buyers or sellers? So if we're looking at a trading area, if we want to actually sell, let's say for example, based on the principles of psychological numbers are levels in which they could indicate or help you understand that there may be a resistance or support. Okay, that means prices can reverse at that point. So if you've got price now, let's say 1.3687, let's say now, anything in between, I would say between 5 to 10 pips of the psychological number, it's not really safe to trade. So if you want to trade safely on the downside, you need to deduct at least 10 pips from the 80 psychological number. So 80 minus 10 is 70. Okay, 80 plus 10 is 90. So I would say you would need for prices to reach 70 to show you more bearish power. That means it got more bearish power once and only prices when it reaches the 70 mark. If it goes up and up and up and it reaches the 90 mark, then you've got more potential of buyers coming into the picture and trying to push prices up. As it pushes up 90 and then it goes to 00, and then from 00, which is another psychological level, then you can see it going up and up much more. Okay, like you can see now, it's at 3689. It's already gone beyond 90, and it's reaching the 3700 area very soon, which is above 90 will be the 00. So 00 is another psychological level. So in other words, I would only wait until prices go under 80 and reaches 70 to then give me that potential trade idea on the downside or a bearish type momentum. Okay, so this is your Z-like pattern, looking at it from a very big picture perspective. So that's your Z-like pattern for USD CAD. So if I clear off everything here, now each side that C to D move, usually the C to D move downwards would be coming downwards in the shape of an A, B, C, D type pattern like this. So that's my A, that's B, that's C, that's D. So I have spotted a potential A, B, C, D pattern in here in purple. Okay, so we'll zoom into that now, and we shall then look at the potential downside move based on that purple ABCD or bearish ABCD pattern. Okay, so let's do that right away. We'll just zoom in. Now we'll ignore that huge Z-like pattern in yellow, and we'll focus or zoom into the ABCD pattern. Now I'll just get rid of this one here so it's clearer. We've got that ABCD pattern like that drawn earlier somewhere there, so it's not really nice at this moment of time. We can always pull it there. Okay, you've got that one there. Yeah, so you could always take that as an ABCD pattern right there from the very top, or you can look into other ABCD patterns, but this was drawn earlier, so I make that projection here, meaning we have got A, B, C, and then D. We're only trading the last leg of the ABCD pattern. So an ABCD pattern, a bearish ABCD pattern is shaped like this. A bullish ABCD pattern is shaped like that. Okay, so now we're looking at a shape like this, which is a bearish ABCD pattern. So we are only trading the C to D leg, okay, but only after it crosses downwards and under the what do you call that, the centroid. The centroid is when I convert this ABCD pattern and I draw a line like this. I got a center point. This center point is an indication when prices goes under that area, only then I would consider a trading area for a sell. Okay, but of course we need to tweak it based on psychological numbers. We need to look at the level of risk and a couple of other things. So now let's evaluate this as a potential sell trade idea for the USD CAD. How do we go about it? So we'll start from scratch here. Second. All right. Now I've got that drawn already, let's say earlier on. I mean, way before all these movements have actually happened. But I'm still sticking to my guns, saying that there is a potential of prices coming to this area here. But where do I actually start trading or look into a trading zone or area? It is by converting this ABCD pattern into a geometric pattern like that. Okay, so you just close up this pattern that way. So you are attaching an additional line from A right down to D, and then you've got that center point area. That center point area has been marked at approximately 1.3685, and again it is very close to the 3680 area. So what does that tell me? That tells me that if it crosses under this center point area, there may be a potential selling zone, but I should only look at 1.3670 as my potential trading area. At this stage it has just gone upwards, you see, so it's not really safe. Now look at where it actually bounced off. Give me a second. Bounce off at 3663. So it was well under 670, but again you see how volatile it's just moving sideways at this moment of time. So it's not really an ideal sort of trade, mainly because of the way the three lines are moving. These three lines in blue are the moving averages. The lightest one is your 50 exponential moving average, and then you've got your 100, and then you've got your 200. So at this stage, I've got that potential of an ABCD in purple aiming downwards, but on a bigger scale, I still have that as well, aiming at this area here. So In other words, I'm looking at a downward or bearish type potential trading idea or a trade signal that is based on a bearish type move, okay, for the USD CAD. Now, if we look into this here on the 4-hour chart, we could see that it has found support at the 50 moving average, and this is the reason why you're not looking at that fast enough move to actually pull prices downwards. Okay, so this is the case with the USD CAD. So it is just giving loads and loads of momentum to the upside, but it's not really giving me enough downside or bearishness at this moment of time, especially on the 4-hour chart. It's giving me some signals of uncertainty as well. But the thing is that it has been marked here as a resistant area. It's still playing down up there at this moment of time, and it's still found resistant at this zone here, and it's within that blue zone that I've marked. So at this stage, it still has some potential to the downside, but it's a matter of waiting at this stage until prices come lower and under 3770. Okay, so that's the area or the trading area that we are expecting. So we're waiting for all these sideways type what do you call that movement to go up and down and all that until it's settled down to a decision of trend. And once it goes under 1.3670 and under, you could then consider a trading area. For those of you guys who would like a hassle-free type trading approach, you can always on the platform, on Blackwell Global's platform itself, use the pending order. So with the pending order, it's very easy. You just go to new order here, and then you insert the price of where that trading area is. So for example, if I would like to only sell at 1.3670, then you would then put a sell order or sell stop order, and then you insert the price that you would like to sell, and then you insert your stop loss and your take profit. As easy as that, and that should actually be more than enough for you to do that. Now, what about stop loss? Now, stop loss, you can always use the 67% as your stop loss. So here, meaning 67 of A to B, all the way down here, okay, A to B. That's A to B of the purple pattern. So if you press A, click from A right down to B, and then you look for 67%, that's your stop loss area right there. 67% is marked at 137.42, so which is ideal, which is before it reaches 50 as well, which is quite ideal, so that's good. So 1.3742 could easily be or an example of a stop loss area based on what we have discussed now on using the 67 Fibonacci level. Okay, so most of these things that I am talking about may appear really new for some, especially for those who have attended the webinar today for the first time. But worry not, because we have got all the tutorials ready for that. It's recorded, and it's going to be in the members area of fxgeometry.com. So in fxgeometry.com, with for members especially, you would get the the luxury of going in and out of the members area and watch the webinars as often as you want. And all these webinars will be by title, and it has all the tutorials on all sort of patterns, especially the geometric patterns and the way I trade myself, as well as all the tips and tricks and the do's and the don'ts. Okay, so a lot of things, a lot of content, a lot of videos especially. So there you go. Now we've covered USD CAD, I would think, and if you've got questions again on the USD CAD, we shall look into that. Let's look into the Euro USD just before we go on to the requested pair. Okay, so on the Euro USD, as of now, I'm looking at a potential pattern. We're looking at the 4-hour chart at this moment of time. Now in yellow, that formation that you see drawn in yellow is a W-like pattern. Now a W pattern basically means a pattern that looks like this. Okay, it should look around about the same, and the reason I say that is because you have got excuse me for that, and you've got a W-like pattern, and it's not the W that we learn at school, meaning that if you've got X here labeled as XA, let's say, and then you've got B here, and then you've got C, and then you've got D, you can see that the D point is lower than the X, and then the C point here is higher than the A, and that should actually be the shape of the market or the type of formation in the market that would be categorized more or less like a Gartley type W pattern. So this is called a W Gartley type pattern. This is more classified or categorized under harmonic patterns as opposed to geometric patterns. Geometric patterns is something I've tweaked from a harmonic pattern. As you can see, it's usually using the ABCD type pattern. Okay, but this one here is a W pattern. So usually when prices has gone up from C to D, then you're looking at a potential of reversal or prices coming down once it has reached the D point. So now we have got, let me just clear off the drawings here. Give me a second, guys. Now you've got, let's say, potentially an X here, and then you've got A right there, and then you've got B, and then C, and we're looking at a price that has actually reversed in where the D could be expected. So all this area, blue area here, it's called the PRZ, which stand for potential reversal zone. So this is where it has actually reversed. So the W pattern usually indicates a reversal here. So what I'm expecting to happen is usually if this was it looked like a potentially successful W-like pattern. So we are expecting the Euro USD to actually reverse and come downwards, meaning from the D point area, which is here. It has reversed there, the D, and it would be aiming at E. Now, how do you know where E is? Now, E could potentially be as low as 50% of C to D. So you would need to pull your Fibonacci from C right to the D area here and look at 50%. Okay, so these are areas that I have marked that it could potentially come down to, which is 1.0757 right down to 1.0698. So what that means is that once prices has gone under this blue zone here, okay, under the blue zone, which means under the under the 1.0887. So in other words, 1.0870 and below, and only then it would be looking like more what do you call that, selling opportunities taking place. So watch out for the prices going under 1.0870 as your potential trading area. Okay, I shall clear all these drawings here. So at this moment, current price is at 1.0912, so it has not really gone lower than 1.0880 at this stage. So at this time, for the sell orders to take place, it's not an ideal price. Okay, ideal price will be under 1.0870 and below. So if you pull your Fibonacci from here, from the C point right to D, you're looking at your 50%, which is right there, 0.757. So if you're looking at 0.757, your take profit, for example, based on psychological numbers, should be above the 1.0750 area, at least by 10 pips. So that could easily be, let's say, an example. If you're looking at under 0.880, let's say it's 1.0870, your trading area for a sell. Then if you're looking at your potential take profit, it should be at least 10 pips above 0.750, which is, I would say, roughly 1.0760. Okay, so that is your trading area. So in other words, it's within this blackened area here with no zone, not the blue zone. This blackened area here is your trading area for sell. Okay, for your Euro USD 4-hour chart. So there you go, guys. So we've got USD CAD and you've got Euro USD. Now let's say now we can then move over to the three pairs that has been requested to take a look at, and these are the CHF JPY, the GBP JPY, as well as the AUD NZD. So let's look at what opportunities could there be on the CHF JPY first. Now let's look at this one here. Before anything else, I would like to first start with the trend, but with the 1-hour chart. So we'll cluster it up together or group it to 1 hour, 4 hour, and the daily chart. So we'll clear all the lines first. Got all this horizontal line and all the drawings. I'll just clear it off, and we could see. And what we're looking at, or would like to look at, are candles movement. The movement of candles, whether or not they're under all the three lines, the three EMA or the exponential moving averages line that you can see here lined up in blue, light blue, a bit darker blue, and the darkest blue here. Now, as you can see, you've got prices under the 1 hour chart, and you've got the price that CHF JPY is trading at now is at 11276. Now this is the thing, 11276, if you look at the last two digits, sorry, the two digits after the decimal, you'll round it up at two digits, you could see it's 77 or 77, 76 more or less, and you want to look at it as 80. That means 76, 78, 79, now it's closest to the 80 psychological number. So you want to mark that 80 psychological level. Okay, so let me just mark that first, and you can always double click, go to the properties section, go into parameters, and you can mark that psychological level at 11280. Okay, so 11280. 80 is a psychological number, 00 is a psychological number, 20 as well as 50. So these are the four psychological numbers, okay? They are the last two digits or the two digits right after the decimal place, under the decimal point, so right after the decimal point. So I'll repeat that, 00, 20, 50, and 80. Okay, so you've got four sets of psychological numbers in two digits. So what it means, now you've got 11280. Now prices need to go under at least minimum 10 pips under 80 or above 80 to give you the direction. If it goes under 80 by 10 pips, let's say it reaches 112.70 and then it goes below and below, then you've got more chances to the downside. Now here on the 1 hour chart, it has found resistance here at 3 lines, okay, which is a sign that it's finding some challenges, obstacles, and finding resistance at this area, and it's a good sign if it has found resistance on either one of these 3 lines, which is a very good thing. So that means you've got more chances to go down. Okay, that means it came down and then it found resistance up, so you've got a potential to the downside. Now, just based on this one alone, you could potentially look at an A, B, C, and then you're predicting a downward move to the downside. Okay, so what you do is you pull the Fibonacci first at any highest point you can see closest to what you're looking at, and you want to pull it from up the very top to the bottom and look at where the correction is. That one corrected itself at 50%. If I use this lower line, it corrected itself at the 67 or very close to the 61.8. So I'll take this one instead. Okay, so what that means is there may be a potential of prices going downwards and reaching the 112.44 area. Okay, this is based on the 1 hour chart CHF JPY. So let's get rid of this one here. Give me a second. All right, so we have got, let's say, I've marked the psychological number here, which is 112.80, closest to the price, current price now. So I'll start drawing the pattern, and I like this one here earlier on, A to B. I didn't pull from there. I pulled from this one here because the C point reached close to the 61.8%, which is a very nice ratio for that. So I'll explain that even more in the videos as well, on tutorials on why is it on this end and not that one there, and why is it that particular ratio, and all the whys and the don'ts and the do's will be explained and will be explained clearly to you in the tutorial section of the FX geometry, okay, inside the members area. So now I've got my A to B, and I'm predicting it to come down to the C to D area, which is as far down as this area here. Okay, so we'll mark this one here like that. Okay, so now I'll draw the A to B from there right down here and also complete that ABCD pattern. Now this ABCD pattern stays as an ABCD pattern so as long as you have not drawn the line A to D. Now once you have drawn a line A to D, you may have converted that pattern into a geometric pattern. So let's convert that ABCD pattern into a geometric pattern right there. Now the reason for doing that is because we want to know where that center point is. That center point, it's marked here at 11281, which is really close, just 1 pip away or 2 pips away from the 11280 area, which is a psychological area. So that 2 lines, red lines there, very close to the central area, is telling you that if you would like to look into a bearish trading zone or selling this instrument, it should be well below the psychological level and well below the centroid area. So ideally 11270 should actually be looked at as the ideal area for trading to the downside. So 112.70. Okay, this is where you want prices to first reach this area, then you want to look at the downside to actually aim at this area here at 11243. So 11243 is really close to 11250. So 11250 is another psychological level that you should not take profit from there. You should always take profit at least 10 pips above. So that would then give you a take profit area, as an example, at 112.60. Okay, so 70 minus 60, that would only give you about 10 pips. Okay, so this may actually be a trade that you would take or not take, because look at this distance here, it's only 10 pips. I mean, for those of you guys maybe looking at the potential of scalping and maybe a bit of a chance, but it's CHF JPY that has got quite a broad or wide type spread, so you want to take care of that as well, because spread is your cost to trading. So the lower the spread will probably be better. So if you've got exotic pairs like this, exotic pairs meaning pairs that does not involve the US dollar. Okay, so you've got all the majors. So you've got CHF JPY, so especially the US dollar. So this is considered an exotic because of the liquidity level as well. It's not as high a liquidity level for CHF JPY compared to the Euro USD. So you see that then will tell you or give you an idea of deciding whether or not you should take this trade. There is some idea of a potential number of pips here, but that's 10 pips. You need to deduct that with your spread as well, and then look at it. If your spread is 4, let's say, then you are looking only at about 6 pips profit potential. So is that really worth it or not? You would need to then confirm that with yourself and only yourself to make that final decision of whether you want to take that trade or not. Okay, that's what CHF JPY on the 1-hour chart. This is what may actually be going on or potentially could happen from the shortest time frame. Okay, so we'll take that away now. Give me a second. All these drawings in yellow, and we'll now look into the prospect of a longer term or a shorter term. Let's go back first on the 5-minute chart. Let's look at what's going on here. You've got on the 5-minute chart, which is a short type term, you're looking at potential of the downside as well, because it's under all 3 lines, and you've got the momentum picking up. As you can see, the candles are moving quite aggressively, and it is having that momentum to the downside. Okay, for those of you guys who have sent me questions, just bear with me. I'll be back with you in about a couple of minutes, and you could see that that's what's happening now for the CHF JPY on the 5-minute chart. Okay, so if we go onto the 4-hour chart, you could see that it's in within a trade on the confusion zone. Why? Because it's in between all these 3 lines. In anything in between, when candles are in between the 3 lines, not above, not under, that is giving you a hint of confusion, not really an understanding on that time frame which direction to take. Okay, and now back to the question. Okay, it's okay, Henny. Henny, I think most of us here can actually hear quite well. Let me just double check that, Henny. Let me just type that to Henny, guys. Give me a second. I think you guys can hear me all loud and clear, right? So I don't think there's a problem at my end. It could well be at Henny's end, so I've just typed that out. So let's just check that one. Okay, so we've got that covered now, CHF JPY, but then we're looking at the 4-hour chart, and then we're going on to the daily chart. Now the daily chart is looking like there may be a chance of a corrective move to the downside. Now it has been shown to me that there is a potential double, what do you call that, double top here. Okay, the reason I would think that it may be a risky double top, it's mainly because of this move here. Okay, if it's a longer move, perhaps you want to take it from top here, okay, all the way down here. But the thing is that it wouldn't be a double top, it would be a sort of a V, okay, but this end here is higher than that end, so that may be a bit of a problem. So it may look like a potential. Don't be overly tricked by this double top because it is showing that there may be a potential of a double top looking like a very nice V, but if this extends lower and lower and lower, then you've got a nicer sort of double top type pattern. At this stage, it is still or perhaps a little risky. Okay, so what we can then do is look into price action, look right and look left. Look right for the psychological level, look left for prices, what do you call that, support and resistance level. So let's do that very quickly. Okay, give me a second, guys. All right, so you've got prices here. Now let me just get rid of these lines as well so we get a better picture from the scratch. Okay, here you go. Now you've got that on the upside. Now the thing is that they are above all three lines on the daily chart, and then on the 4-hour chart it's a bit of a different story. You've got the prices, you know, heading downwards in within the three lines, and then on the 1-hour chart you could see it under the three lines. So this actually is giving me hints of uncertainty because the three time frames that you have clustered together is not giving you a match up type what do you call that, trend direction. It's not clear on the trend direction. So if we go on to the 5-minute chart, let's see whether we could build a story from the 5-minute chart itself. Now prices came downwards and then it headed upwards, and now it's heading upwards and it's in within the three lines. So it might find a little bit of resistance in you know, at either one of these lines. So now it has passed on. As you can see, it has gone through the first two moving average line, which is the 50 and the 100. So now look at it weakening straight away, you see. So it may find, when you see prices or candles going through the lines, it may then find resistance or even support depending on the direction that it's trading at either one of these lines. So as you can see with your own eyes now on the live market, you can see the prices went upwards, but then look at how it got stuck at this line here, and then it's just weakening. So this could easily find a bit of a resistance. So we've got 5 minutes giving you a bit of resistance there. That means you've got potential A here, B here, C, and then downwards. So again, on the 5 minutes, it's giving you hints to the downside. And then if you go on to the 30-minute chart, you could see that you got further resistance to the downside, and then you got prices came down. It made a correction. At the 50 or the 100 moving average. So you've got more downward now. Again, movement potentially to the downside. Okay, now 1-hour chart found resistance and it hasn't even crossed in. Now you've got a bit of correction there. So again, you've got an A, a B, or an A here, B here, C, as I've drawn earlier on with the other pair. I'm not sure which one. That could be similar to what we are looking at. It may be a correlated pair. So here, if I do one now very quickly, you click onto that all the way down here. You see that it is there at 67 area. So you can always draw the ABCD pattern, and that's where you could see A on there, B here, and then C to D, giving you that potential there. Okay, so there you go. Just do that. So we've got that one there, here. Okay, so you got A to B right there. It's symmetrical. Okay, and then you just combine the B to C right there. So we are making a forecast saying that there may be a potential price fall to this area here at 11243. Okay, so we mark the centroid area as your trading area right there. Okay, and then we look at this potential right here. Okay, so we've got a bit of a rejection candle there as well, which means that prices tried to go upwards, but the body is not full enough, so it left that candle with a skeleton. So it's not really left the candle with a bone. Okay, so the wick, and that means it's got not enough body to take prices upwards. So it has found rejection, it has rejected price there and found resistance there. So it's pulling prices down at this moment of time. For the CHF JPY, even on the 1-hour chart, we've got prices just trying to flirt around this area right here. Okay, but we have got that rejection. So we need to understand and see or monitor whether or not prices would then come back down and come under 11280. So once it goes under 11280 towards 11270, then we've got a better idea of the bearish sentiment. Okay, so this is for the CHF JPY. Now we have got that here looking like this as well here. Now I usually would like to remind again, if I look at a pattern A, B, C, D like this is my A, right? This is my B, this is my C and D. Okay, we are looking into trading the C to D leg, and we want to always combine this line A to D and find the center point here, and this is the area we will start entering to sell and then aiming at the D area here. But it should always be tweaked for the sake of risk management in terms of psychological numbers. So psychological numbers, tweaking psychological numbers before really deciding to click the button to sell or buy or even apply your stop loss and take profit, it is almost essential to measure your risk level or manage your risk by applying the psychological numbers principle. Okay, so similarly, psychological numbers are also going to be explained much better in the tutorial section of the FX Geometry members area. Okay, so there you go. So you got ABCD. This is a bearish type ABCD because it's pointing downwards. Your D is pointed to the south. If your D is pointed to the north, like this is your D, that means it's in a bullish market. So we only look at bullish ABCDs in a bullish market. We look for bearish ABCDs in a bearish market. So here, if it is at all thought to be bearish for the CHF JPY, then you want to look for bearish ABCDs. Okay, so let's just take that one out. Okay, we have got hands up here. Give me a second, guys. Okay. All right. So hope that makes sense for the CHF JPY on the 4-hour chart. Okay. So 4-hour chart is giving you that, and let's see what's happening now. We have got prices still trading at 112.88. So we need prices to go under 80, as I've mentioned, to give us a little bit of a hint to the downside. But again, it's trading in between three lines, the three lines here, which are the 50, the 100, and the 200 moving average. It's just trading sideways, meaning that they're just at a side line, I mean horizontally. It's not pointing upwards. They're not moving up like this, you know, they're moving to the side. So again, there's a bit of uncertainty going on there. And here we have got a different picture for the CHF JPY on the daily chart. Okay, as we go into the weekly chart, you could see that price is a little bit above, but not way above on the weekly chart. On the monthly chart as well, not way above. So there may be a bit of a wishy-washy situation on the CHF moving up. There may be more what you call that strength of the JPY, what do you call that, as opposed to the CHF. Okay, so with regards to CHF and JPY, usually if the situation in the market has got a lot of geopolitical uncertainty or anything has got to do with the news that could relate to terrorism, could relate to geopolitics, like you know, potential for war, some threat, or a lot of things in different countries, things like that, that has got a bit of a power of politics and geopolitics and all this mix-up of things, then you would see a potential interest in the CHF usually, okay, as opposed to JPY, because both of these ones are what you call that, are safe havens, okay? But if you've got the geopolitical problems, issues, let's say it's got to do with North Korea or something in within Asia, then the safe haven wouldn't actually be into Asian type safe haven like the yen. It would probably be with the CHF. Okay, so that is the case with the European side of things as well. So if you've got more geopolitical events and threats and all that in within the Eurozone, then you would then see that the what do you call that, the interest for the safe haven would be more leaning towards the yen. Okay, so they would be selling the CHF and then buying the yen more. So here we need to first watch out a little bit about CHF JPY. We need to respect the price a little bit more, wait for prices to go under the 11280 to give you the bearish sentiment. Wait till prices go above all three lines to give you that bullish sentiment. Okay, so as you can see now on the 1 hour, you've just got that play of price just bobbing between you know, little pips up and down. So this is not giving us a very clear indication of what's going on CHF JPY until price action tells you so. Okay, so there you go. CHF JPY covered. We are moving next to the GBP JPY. So GBP JPY, just going to look at the GBP. It's GBP USD right there, and let's look at GBP JPY. All right. Now, at a glance on the 1 hour chart, you've got prices still in between three lines, but trying to pierce through. It has made that downward move with very strong bearish candle, trying to pierce through all these lines, has managed to pierce through that, but it got a bit stuck and found a bit of support at this level here. When you look right, you look at the psychological level of the current price, it is closest to 146.20 because it's trading at 146.18. So 146.20 should be the psychological level that we're looking at. Okay, so that's hence the reason. It needs to go above 146.20 and above, like 146.30 and above, then it would give you that bullish momentum. But again, it has to go through and pierce through these lines as well until it gives you a clear direction to the upside once it goes above all these three lines. Okay, but then this support here is sort of supported by previous support. As you can see, you see this area here and this area here is almost mirrors each other. So if you look into this one here, lowest body, lowest wick or candle, you could then draw and have that as your support type zone. That support has become a support from previous resistance, as you can see. So support does become resistant and vice versa. But also, as people say, history repeats itself. I would think that the support or the resistance may repeat itself as well. So it has found support here all the way up, then it found support here as well. Now it found support here, so I would then think on the 1 hour chart for GBP JPY, it's got more support type movement expected. That means uptrend, meaning you've got support here, you've got support here, correct? Now this means higher high. This high here is higher than, higher lows, higher lows. So you've got a low that have moved higher. So that gives you a bit of a momentum to the upside. Then we need to look at price. Price needs to go above 146.20 and above to give you more room to the upside. At this stage, we need price to pierce through all three lines and go above all the three moving averages, and only then we have got a clearer picture to the upside. Now, it has found support here, so my guess based on what I see here is it's actually found support quite strongly on the 200 moving average, as well as previous support there has been lower, so you've got a higher low, and that is an indication of an upward pickup momentum to the upside for the GBP JPY 1 hour chart. Okay, so now let's move on to the 4 hour chart and then look at trend once more and see what's going on in the 4 hour chart. Now here on the 4 hour chart, you've got that indication again. It's weakening, it's finding sort of like a support there at the 50 moving average this time. So yes, it looks like it's got some potential to the upside as well. Okay, but the thing about this is, from what I see, there just may be a potential of a Z-like pattern here. Okay, now this Z-like pattern may look something like this. Okay, let's just look at what's going on, and let me just measure the thingy. It's just too low for me. I mean, this level here, it's not a good level to consider. So let me just see that. Perhaps I'll take that back and say that that Z-like pattern is not really a high probability type Z pattern, but it may actually then hint us that the GBP JPY has got more room to the upside. But again, we need prices to show us that. So I would still wait till prices go above the 20, let's say 146.30 and above, 146.30 and above, then we've got that hint or clue that the bulls are dominating the whole market. Okay, for the GBP JPY. Let's just check on the daily chart. Now, as you can see, it's again above all three lines. So we've got it. We take it from the 1 hour chart. We see that it's got all this support created as well, and then we look at the 4 hour. It found support there, and then we look at the daily chart. It went right way above. Now it found a bit of resistance here only because it found resistance there as well. So that's a sort of a resistant area or zone. Highest body here, and that highest wick, so it's within that area. So that's your resistance zone, that's your support type zone as well. So let's look at what's going on. If we look into the 4-hour chart, well, prices coming downwards, you've got a bit of a support there, yeah. So I'll just polish this one a little bit and make that as a support zone. Now I would like to take this away so we don't get confused, and zoom in, zoom out, sorry, and look at, take that away as well. Okay, so I want to look at support zone previously, whether we've got any support zone. We've got a bit of a resistance zone right there, quite a significant fall, but I'm looking at whether price has actually gone up in the past. As you can see, you've got a price that has gone up in the past, okay, and I want to look for, you've got resistance right there, and then you've got some support as well. I want to look at significant support in the past. There you go, you've got something there, yeah. So here you can measure it right there, lowest body and lows, there you go. So this could be the reason why price is trapped at this moment of time between these two lines, 14619, which is very close to 14620 psychological number, and you've got 145.36. So what I would then say is we need to first wait for prices to break out between these two rate lines, whether above these two lines or under these two lines. So then you've got the direction, okay, a clearer direction of where prices would like to go or where the big boys have driven prices to. Okay, so now it's a bit of a trap situation here, but let's look at other more significant areas for the GBP JPY. Let's look and let's just scroll, take our time and just observe prices and see whether we could find any interesting point. We're looking at price now as well as prices that has actually moved whether upwards or downwards in the past. Okay, so if I do that now, you could see it in a better, bigger picture. Can you see that in the past you have got a huge rally upwards? Okay, so there is a risk of prices shooting up as well. We don't know that until it shoots up, but if it doesn't, then it might come lower and all the way down. That means previous support has become resistant. But at this stage, it might be a repetition of what has actually happened. That was a very, very big move up, okay, a huge move upwards. All right, so we need to look, because prices now it's pausing at this area here where prices actually move up. So it's always good for us to look into this area and draw a support line. So before that, let me tell you when that was and give you an indication of how. See, look at that price rise there that started. It started earlier, but let's say we take it right there. That was back in April 2013. Now, when prices went up at that time in 2013, it went up to that point, of course, months and years maybe, but that took it to 4,000, almost 5,000 pips, you see, and that is a huge move, okay, and that actually, you know, it started falling there, which is 18 there, August 2015, so it's about 2 years or so, and it found that huge rally. So you need to respect that level that it has found that big rally on. So I would like to mark that first. Let's see. Let's see whether I can mark that there. Okay, so there. So because when I zoom in, I would like to do that. So here you go. So you have got that support area there, right? So we can adjust this to this area here now. Lowest body, okay, and then you got lowest wick. Got the wick there as well, so you can always mark that wick right there too. Okay, so there you go. So this is support area. Now you've got resistance area here too. Okay, and you can always mark that here, right? So you've got that marked, and you've got, let's see. So here you go. You've got this area, it's all trapped now at this moment of time. Your prices, sorry, trapped at all these area here. So what I'm trying to say is you need prices to go above the 148.00 area and above in order to ascertain a bullish momentum. At this stage, it has found resistance at the very top here at 148. So let's wait till prices go under this area here, under all these area here, to give you a better understanding of the trend direction to the downside. At this stage, it's still too early. What if it just bounces off and then go above 148? That means it would have repeated the history of that big movement in 2013 to the upside. So let's wait till price go above this blue zone or under this blue zone. Only then we can make a better decision of the trend for the GBP JPY. At this stage, a little bit too early, so we need to be cautious. And also, in other words, you got prices trading in between all three lines, which is not a good thing. It needs to be above all three lines, EMA lines, or under all three lines to give you the trend direction. Okay, so there you go, guys. That was for GBP JPY. We've also covered CHF JPY, and now we're moving on to the AUD NZD. So let's look at AUD NZD. Let's see what is going on with this pair. Now, with the AUD NZD, we have got prices finding resistance. We're looking at the daily chart now for the AUD NZD, and I've got this pattern here. In white, I've got that pattern for the Z-like pattern, and in yellow, I've got the bearish ABCD type pattern, which basically giving me a clue or a hint that there may be a potential to the downside reaching at this area here. But what if we go onto the 1 hour chart, look at what's going on there first. We've got prices here, okay, and we've got prices went above. We've got all three lines pointing upwards, so you've got some bullish momentum going on. Let's look at the price as well. Price is at 0795. 0795 is just too close to the 0800 psychological number. So again, it's just too close to psychological number. You got all this bobbing up and down of prices. And when you look left, you got another resistance area here, then you got a resistance area here. So let's just mark this area here, for example. Okay, there you go, and also here. So you've got that resistance area to pass, okay? You've got some support area as well, but let's just look at this again from the starting point, okay? So we look at AUD NZD. It was AUD NZD, yes it was, okay. So I'll clear all these lines that we can see so we can get a better, clearer picture. We want to always minus all this noise, okay? So here, for example, I want to pull all these to the downside. I mean from the top to the bottom. I want to look at what's going on. It has actually gone above 50. If this was a Z-like pattern, it should actually have been, should have reversed long time ago, but then it's showing that it's got more momentum to the upside, hence the reason it hasn't even reversed. So AUD NZD upside above all three lines on the 1 hour chart. On the 4 hour chart is just peaked out of the three lines, and then on the daily chart it's starting to peak out as well, so it may actually be showing some bullish type momentum on the AUD NZD. Now the thing about it is that you want to actually be a little bit cautious on fundamental on the economic calendar next week. Now this Saturday, which is tomorrow, there is a G7 meeting. It might impact the euro. Okay, impact the euro, so impact the USD, so in other words, it may actually impact gold, and then gold, in other words, also impact AUD and all that, so you need to be very careful. Next week, you've got quite a bit of a heavy type calendar, especially for the AUD, the GBP, and the euro, so you want these events to actually help to push your candles, okay, or your trades to the direction that you want. So you need to be very careful in understanding the trend as of Monday when market opens itself, and then look at what the top movers are focusing on, which pairs are they, and then match it up again with the fundamentals. So G7 meeting would impact the euro, so be very careful with that as well, and that usually gets marinated in the weekend, and then it gets what do you call that, reflected when market opens on Monday. Okay, so be very careful. So you guys might be a little bit surprised, wondering, oh, what on earth has actually happened on Monday, when Monday itself has got not much of an economic calendar or any news, but that could actually be a reflection of what has had happened during the weekend. So be careful with weekend meetings by the big boys, by politicians, by what they say, or results, or economic data, or anything like that. So because that gets reflected usually at the very early wee hours of the morning, and sometimes not even when the Asian market opens, but when the London market opens, because the London market is the biggest transaction. I would say the biggest transaction would happen in the during the London market, because London is that big hub for forex trading. Okay, in London, it's the biggest one. It's not New York, it's not Los Angeles, but it is in London. Okay, so for the forex industry, especially transactions. So be careful with that, especially London opening time. That's when things can actually be reflected for what have actually happened on Saturday and Sunday. All right, so here you go. AUDNZD daily chart as such. We go back to the 5-minute chart, look at what's going on so we can get a bit of a story. You've got bullish momentum finding support there on the 5-minute chart. We go on to the 30-minute chart. We've got more bullish momentum to the upside. It has moved higher. Then we go on to the 1-hour chart. It moved even higher. On the 4-hour, it's picked out higher again. Daily chart is picked out higher. So in these instances, I think the AUD/NZD has got more bullish type momentum as opposed to bearish type momentum. So let's look into 1-hour chart. Let's look at what's going on. You've got it there. When we look left, we see that you've got resistance here. So let's draw what we've drawn earlier on here as the resistance type. Okay, based on that this week group of candles. So we've got resistance zone happening there. We've got a bit of a big fall here. Now it's gone back to a bit more resistance there. Okay, so if we zoom out, let's go on to 4-hour chart and look at how much prices have actually respected that one. You've got a bit of support, and then you're going upwards. Got again some more support upwards. Then let's look at it. Let's just look at it from a big perspective. So here itself, we've got ample of hints of how prices respects that two lines that we've just drawn there as the potential support resistance area. We've got follow prices as well. Now prices have actually gone under these two lines as well. We've got some support going on there as well. So in other words, we need to look into how much prices would go through these three lines to go under. If it goes above the 0.810 or 0.830 and above, then you've got that bullish momentum to the upside. At this stage, it's a little bit too early to look into it. I mean, some of you guys may be wondering, okay, I've got an A there, B, and then C, and then all the way down. But the thing is that it's a little bit, I wouldn't say risky, but probability is slightly lower because I don't see that these peak area here has actually found resistance exactly on the dot of either one of the moving average. It has gone past it, as you can see. Okay, so not really a very nice one here. I don't see that. Another thing is the Z-like pattern is not really that what we call that high in probability. So here, for example, the prices now. Let's look at points. Now, prices now is exactly at this point where prices have shot up a little bit. So you can always use this area here as a bit of a resistant area. So I'll draw an extra line. So you've got support resistance. So I've got these three lines now as my sort of indicator of significant support resistance. So I want prices to first and foremost go above or under that zone. And once it does, then it's a better play of price, giving you a clearer direction. Okay, at this stage it's found correction, but it's a little bit unpredictable. I want prices to give me a better, clearer picture by moving under that blue zone or above that blue zone. If it's under the blue zone, I would prefer for it to go under all three lines, and if it does, then I've got that trend direction clearer. Okay, if it gone above, then you've got a better play of the market because you've got no three lines above to act as an obstacle. So you've got a very an easier move up compared to an easier move down because you've got always obstacle by these three lines if the price wants to move downwards. Okay, guys, so that's it. that's the three pairs that's been upon request: CHF JPY, GBP JPY, and now AUD NZD. I hope that's been clear for you guys. Any other questions, guys, before we wrap up for today? I hope that's been clear and beneficial for you guys. Any other pairs that you would like to look at all? All clear, loud and clear for you guys? How your, I mean, anything that's relating directly to your trading, to your pairs that you are looking at this stage, for those who just joined us as well, let me know. Okay, any questions at all, guys? All right, I see no questions at this stage. Perhaps if you guys feel more comfortable sending me an email at a later stage, you can always email me again at the academy@blackwelltrader.com. Okay, guys, if you guys have got no questions, things been explained clearly, and if you want to send me an email later on, then I think we can wrap up this session today on a Friday and see you again on a Monday. So remember, guys, we've got webinars on Mondays and Thursdays. If not changed, if the plans have not been changed, like yesterday, got a bit of a change of plans yesterday, so we what do you call that, postponed it to today instead. Okay, we've got a bit of a got questions. Let's just see that. All right, brilliant. Okay, so I think you guys are okay. No questions, so that's good. So again, for you guys who would like the today's recording, simply send us an email or request to academy@blackwelltrader.com. Okay, so we can then have that sent to you by email. All right, guys. So that's good. Now, thank you very much, guys, for attending my webinar today. I would like to wish you guys a very good evening. Thank you so much. And before that, I would like to also just give you a bit of a what do you call that? An update on our location at this moment of time. I am doing this webinar from our office here at Blackwell Global at the WHH building in Limassol, Cyprus. Okay, so that's the URL there for the website, blackwelltrader.com. Okay, so this is the website and the address that we have. We've also got the email that I've mentioned, academy@blackwelltrader.com, and our telephone number there. The code, dialing code would be the +357 and then followed by the number for this office here in Limassol, Cyprus. Okay, guys, so that's it I have for you guys, and I would like to give you a big thank you again, wish you a big thank you again, and see you again on Monday. Meanwhile, anything else, simply email me at academy@blackwelltrader.com. Thank you once again, guys. Bye-bye. Have a very good evening and a good weekend. Bye-bye.